they are for the period that has ended on the 30th of March 2019. Just to contextualize, it is the process, it's the timing by when we had to come here that would have just had an impact on that. So to the extent, because these are results that have been audited, these are results that have been publicly published now. So, honorable members, to note that it could well be old news, as it were. So I just wanted to set that context. So even in dealing with, we have had various other engagements with various structures of parliament on whether it's on SCOA, on appropriation as to what then. And as we are aware that the Minister of Finance, towards the end of this month, will release the MTPPS, which deals specifically on some of the financial debt side of Eskom, and the President will be releasing the Eskom paper about the future. So if we could just get that understanding through you, Chair, that late as they are, a lot is already happening, a lot is being said, and some of it we would be not in a position to talk too much about without undermining the protocols of the other competent leadership to deal with them. So these are results that remain very disappointing, as manifested by the declining financial, operational, and our environmental performance. There is encouraging growth. There is encouraging progress to instill governance and root out financial mismanagement and malfeasance and maladministration. On the operational side, we have implemented our Generation 9-point recovery program, which has started to see some positive results in plant performance through the winter period. We are pleased to say, thankfully, we have not had to load shed since the 24th of March 2019. The government financial support arrests our short-term liquidity concerns and relieves the financial pressure. As I indicated, these are issues that will be covered in more detail as they are part of the work in progress that the Minister of Finance and National Treasury are working on. Our turnaround strategy to stabilize, to separate and grow the company for financial and operational sustainability remains urgent. Those elements of the strategy that we can implement, we continue to. But at the end, it is very critical to create a country energy plan as the next few years pose tougher challenges for Eskom and the energy industry in an over-changing landscape. This period, we have had net loss after tax of 21 billion, which was 10 times the loss we had reported the previous year. We lost about 2.3 billion the previous year. We now reporting a 21 billion loss for the period ended March 31. We have had up until March 30 days of rotational load shedding. We have had industrial action that has impacted on operations and finance. Our energy availability factor has been at 70% and to the later 60s. That has necessitated for us to spend more on our diesel-generated power. We spent about 6.5 billion to minimize the magnitude of load shedding in the period. It is in the same period that we had some challenges on our coal. Our municipal area debt rose to 20 billion. The environmental performance, owing to the age of our power station and the quality of the coal that we've been using, has continued to further deteriorate. The leadership stability, as at this time, as at the 31st of March, we were starting to believe we have found stability at Eskom, having now appointed the Chief Operating Officer, and the Chief Financial Officer had just been appointed in a permanent position at the time. Just some few headlines on our plant availability. The graph on the left really shows how our plant availability over the period between 2014 and 2019 has performed. The emphasis more is on the blue bars, where our generation has declined from the highs of 78 to 70, and we've also seen less than 70. Our coal plant had declined even further than our overall generation, and our energy utilization factor has continued to stabilize, increasing to 91, but it has stayed in the 90 level. Our plant on the other side has grown, has aged, with attendant challenges of reliability. The average plant life average life of a plant at Eskom is about 37 years. Our transmission and distribution networks do show stable performance, but they are the areas that continue to be exposed to either illegal connection on the distribution side that leads to overloaded transformers and substations that then explode. On the other side, we have seen vandalism where people physically with angle grinders go and cut a whole transmission pylon using the steel members for a variety of reasons, including selling that into the scrap metal industry. We have installed 540 volt transformer capacities. We have had 379 kilometers of transmission lines commissioned. Our stock coal started to improve by the time we had reported our year end. On the environmental and safety side, there we have seen increasing decline and deterioration. Our water consumption has been on the increase, and our particulate emission standards have been deteriorating. We have connected just under 192,000 new houses in 2019. Compared to 215,000 houses for the previous year. Our lost time due to injury has worsened, moving from a rate of 0.24 in 2018 to 0.31. Regrettably, we have had 3 fatalities during this period. The same number of fatalities we had last year, and this is our own employees. But members, to note that we also have a lot of contractors that are operating on our sites. There we had sadly 11 fatalities. Our broad-based BE attributable spend is at 85 billion. We spend with black-owned suppliers another 52 billion. Our racial, gender, and disability equity has improved, albeit small. We've had 933,000 beneficiaries through our corporate social investment driven by and large on the work that we do in the foundation and in the educational space. So, Chair, if I could pass on to the CFO to take us through the financial performance.
Thank you, Honourable Chair. If we move on to the financial performance, I'll explain the detail on the income statement and the cash flows. I think just on the overview, the point to highlight there is the audit opinion for March 2019. Firstly, around our going concern status, it reflected material uncertainty, and effectively, with the support that we received from government, we were able to then justify the basis of signing off the financials as a going concern. But it is an area that has been highlighted, similarly like the previous financial year. Honourable Chair and members, I think the other important item from an opinion perspective is around our procurement processes, around the PFMA compliance requirements. That modified opinion has continued into this last financial year. However, we do see that the trend is going in the correct direction. It does take time to fix and resolve, and I'll highlight in the next slide, Chairperson, around the reportable, the irregular expenditures and fruitless and wasteful. I think the first point to just highlight there is that the waterfall chart, what it's doing, it's reflecting what the opening balance of irregular expenditures were at the beginning of this financial year in April 2018 of 21 billion rand. And then as we continue to clean up around our procurement processes, we have then recognized an additional 3.4 billion of irregular expenditures that's related to prior years that we've now recognized in the financials. And once a transaction and contract is identified as irregular, it may have a number of years to still spend against, and as we spend during the financial year, that amount is then also disclosed as part of the irregular expenditure, which is reflected in the 1.7 billion of contracts that have been identified as irregular and are continuing per the contractual agreements. Chairperson, I think to highlight that as new transactions during the last financial year, we've recognized 1.5 billion of new irregular expenditure. I think that must be taken in context of the amount of new contracts that were signed in the FY 2019, which totaled around 61 billion. So I think that's the point to highlight, that we believe as Eskom we are putting in the necessary controls to rectify this situation. And then, Chair, what was condoned, 1.1 billion, and then what was recovered, the 900 million being effectively the recovery and payment from McKinsey during the last financial year. That then left us with a total closing balance of 25.7 billion rand, and it's just split in the bottom between the amount of transactions and of the 1.5 billion that is new, and where it was comprised and constituted from. So I think to highlight, Chair, that we believe we are on the right track, and we just continue with that discipline in resolving our procurement processes. If we, Honourable Chair, we move on to the income statement, one will see that on a revenue side, it remained relatively flat, a growth of 3 billion from 177 billion. That being attributable firstly to the tariff that was received in FY 19, but reduced by the lower sales volumes, which I will touch on in a future slide. I think the importance here is that our earnings before interest, tax and depreciation Chairperson and members, you will see that reflects a drop from 45 billion to 31 billion rand, and that mainly being attributable to the growth in primary energy costs of 14 billion rand from the previous year's 85 billion to 99 billion, and we will go into detail on primary energy. And then employee benefits grew year on year by 4 billion rand, where our other operating expenses remained flat at 18 billion. Once you go below the line, that's a function of what is happening in terms of the assets that are being commissioned, and you will see that the depreciation and amortization grew by 7 billion year on year, percentage-wise being 29%. It also includes accelerated depreciation put through in the last financial year for Komati Power Station. And then, Chairperson, our net finance costs had a net growth of 5 billion year on year. One, as our debt increased, and number two, as more units get commissioned from Medupi and Kusile, we no longer capitalize that interest, we then expense it to the income statement. With our assessed loss, then you get the income tax benefit of 8 billion to then, as our chairperson has said, the growth in our loss year on year from 2 billion to 21 billion. If we now move on to the revenue side, just to highlight there, Chairperson, I think firstly, if we look at the bottom table, you will see on the sales side that on the domestic sales, it dropped by 1 terawatt from 197 to 196 terawatts. And on the international sales, cross-border, it dropped by 3 terawatts. The main reason for the drop in cross-border sales has been the regional countries, now that they've come out of the drought in the last year, being able to self-generate for themselves, therefore requiring less dependence on South Africa to support that supply. I think, Chairperson, the other point to highlight is on the top where we talk about the revenue, that drop of 3 billion, you will see that the accounting treatment under IFRS adjustment grew from 3 billion to 7 billion rand, which is effectively relates to, for accounting purposes now, Eskom can only recognize its doubtful debt once payments are made and the cash is received. And this is links to the growth in our rear debts in Soweto municipal and some other rear debts. As that increases, we then adjust from the revenue, a bigger adjustment shown in that 7 billion rand. I think that's important to highlight. If I now move on to explaining maybe the big contributing factor to the drop in and the growth in losses and the drop in EBITDA, it's the growth in primary energy. And Chairperson, this is a function of firstly the increase in coal costs being linked to, we were in a situation where we required to procure coal that was available on a short-term basis, which did come at much higher rand per tons because we had low stock levels across our fleet, and we also needed to improve the stockpiles to ensure that Eskom has the ability to then generate power to meet the demand. So those urgent purchases of some 42 contracts have resulted in an increase on the coal side of a total of 5 billion rand year on year. And then you also see during FY 2019, in an attempt to minimize the impact of interruptions, Eskom, as our chairperson has said, we had to utilize both Eskom's open cycle gas turbines as well as the IPP gas turbines much harder than the previous financial years. We've also seen that as more renewables are connected to the grid, they generate more electricity, and then we have to then make sure that those costs are then passed on to them, and then the growth in renewables. So in total, that basically gives you the 17% increase in primary energy from 85 billion to 99 billion rand from 2018 to 2019. If we move on now to our debt situation, where as at March, our total debt comprised 441 billion rand, reflected in debt securities and borrowings. That growth from 389 billion year on year. Chairperson, you will see that it basically we had to fund our operations through a combination of, firstly, the reduction in liquid assets from 24 to 12 billion, and then the growth in borrowings to ensure that we can continue with our operational requirements, as well as making sure that we continue with our capital needs, both in terms of generation, transmission, and distribution. If we now move on to, I think, the critical part of where Eskom finds itself, it's really about the cash from operations. It's not sufficient to service our debt requirements. You will see that, firstly, your net cash from operating activities has dropped from 38 billion, Chair, to 33 billion year on year, but your debt service requirements has increased from 44 billion to 69 billion rand. And that debt servicing includes both interest as well as capital repayments of the debt. That then leaves us with a shortfall before we even invest in our capital requirements of 36 billion. We did drop our capital requirements significantly between 2018 from 55 billion to 36 billion. However, and then we had to finance the 72 billion with 58 billion from financing activities, and as I said, the remainder was then funded in our drop in cash and cash equivalents in terms of liquid assets. Just to highlight to the committee chairperson, the bottom graphic is just demonstrating that going forward with 440 billion of debt, there's significant debt service requirements that will occur over the medium term. Although we've reduced our capital spend from a traditional 50 billion to 55 billion per annum, that is the pressure that, as the chairman has said, that is being addressed to the other committees of Parliament, to highlight that. And in terms of what does this mean on the next slide of the cash from operations and the financial performance, one would then expect that all your key financial ratios has deteriorated year on year, with your EBITDA margin dropping from 26 to 18%, and more importantly that your debt service cover ratio ideally should be one where it can meet interest and capital. It's effectively half of that, which means the other half is funded through the support that is required from government. And then culminating in your gearing ratio increasing from 72 to 76%. The graphs on the right-hand side reflects the drop in profitability as well as earnings before interest and tax, and then that's reflected in the ratios and cash from operations figure on the bottom side of the slide. Honorable Chairperson, if we just highlight our capital expenditure, and the trend in that. As we are nearing the conclusion of Medupi and Kusile, we see then the trend in our capital expenditure decreasing, as I highlighted, from previously around 56 billion, 52 billion, to now in the last financial year 34 billion rand, of which a portion was spent on your existing infrastructure as well as the new assets infrastructure that is required. To highlight to the committee that the electrification, which is funded by the Department of Energy, of 2.8 billion, is a separate funding mechanism. And just to disclose how much we spent in 2018 and 2019, Chairperson, on Medupi and Kusile in particular over those last 2 years. If we move on to the item I highlighted around the rear debts, in particular your municipality, Soweto, it also includes some large power users and international rear debts, but the trend is concerning, whereas at March 2019 we ended up at close to 20 billion rand, an increase of 6.3 billion for the year, averaging about 500 million per month. And then we see that the payment levels for Soweto sit at 12.5%, and the overall current payment levels for municipalities is 81%. Chairperson, I think it's important to also say that on our other customer base, there's 2.5 billion of arrear debts and 800 million linked to international customers. This is an important item to address through the process going forward to contribute to Eskom's liquidity and financial sustainability. Just from a funding perspective, in 2019, we raised 63 billion rand. We are planning for this financial year that we're in to raise 46 billion rand. At the beginning of the financial year, we'd already had committed facilities of around 27 billion rand, being about 58% thereof. Just to highlight that a large portion of our debt is also guaranteed through government, of which, of the 350 billion as at March 2019, we've already utilized 279 billion of that and had committed a further 52 billion, with 19 billion remaining. The bottom graph just reflects when those respective loans will mature in terms of where guarantees were utilized. Chairperson, if I move on to the next slide, Eskom has reviewed the last two decisions of the regulator in terms of the 2015, 16 and 17 RCA determinations, as well as the 5.3% decision for 2019. We are currently awaiting a court date when this matter will sit and be heard. In terms of the MYPD4 decision, Honourable Chairperson, 9.4% for 2020. It also allowed for the phasing in of the recovery of the previous RCAs of 8 billion per annum, which culminated in terms of the average price for this financial year being 13.87%. Chairperson, it's our understanding that the way the regulator had treated the support announced by the Minister of Finance in February, where that 23 billion was then deducted from Eskom's allowed revenue in MYPD4. We are awaiting the detailed reasons for decisions by the regulator, which should be published soon. We have also, as part of the process, on an annual basis, reconcile our performance to the previous decision, And in terms of the methodology, we make a RCA application for 2019, which was around 27 billion. Chair, just to highlight that at the results, we just gave an indication of the budget for 2020, basically just highlighting that we were expecting a similar bottom line loss, where the EBITDA improved marginally from 31 to 34 billion, but with your depreciation increasing, etc., as more plant commission plus finance costs, it left us with a net loss. We are focusing on making sure that we can reduce that loss, but processes that are implemented will take time to reap the maturity of benefits. As part of this, Chair, we have challenged the business to extract savings over the next 5 years. At the end of 2023, our cost base, we would like that to be reduced by 33 billion. And over these 5 years, it will add up to a cash benefit of 77 billion rand to Eskom's cash flows. The bottom is just highlighting that even in this financial year, your debt service commitments of 84 billion compared to your cash from operations, and the big difference between the EBITDA number of 34 and the 25 in the graphic is linked to working capital, mainly attributable to us restoring our cold stock days across our fleet, which doesn't affect the income statement but has a cash flow impact. You will see, Chair, in that cash flow graph, we have the initial support by government announced in February of 23, plus the additional appropriation of 26, which left a cash movement shortfall of 5 billion, which Eskom is addressing. Chair, I think just to highlight in the next slide, we need the price of electricity to be able to recover prudent and efficient costs, and the graphic below just reflects that Eskom has a cost of capital of about 10%, and if we are not allowed to recover that cost of capital, we will always see then the pressure build up on the balance sheet and the debt going forward. And the dotted line at the bottom is just reflecting the actual returns that were generated by Eskom since 2014 to 2019, hovering around between 1 and a 0% return on assets, where we believe it should be sitting more between the 7 and 8% return on assets from a regulatory perspective and a sustainability perspective. If we just move on, Honourable Chairperson, this graphic just reflects one, Statista did analysis and benchmarking of the electricity price in South Africa, and just to highlight the difference between Eskom and South Africa is Eskom is obviously our selling price, and South Africa is representative of the entire sector, including the municipalities. That's the slight difference. The point to highlight here is that we're still on the lower end of the graph in terms of prices, and on the left-hand side, just some indication of where the price of electricity was indicated by some various institutions like BUSA, EIUG, between 108 and 118 cents per kilowatt. And even in the previous IRP, they reflected a electricity selling price line of 116 cents, where we currently sitting at around 90 cents per kilowatt for March 2019. Chair, if I just look to now sum up, in terms of the turnaround plan for Eskom, as the Chair has highlighted, this has been dealt with through other processes. All we are highlighting is the debt is important, Eskom needs to deal with its own cost base. As I mentioned, the 77 billion rand to reduce the base by 33 billion. And at the end of the day, to be sustainable, you need the price to recover its operating costs and to service the debt, service cover commitments. So, in conclusion, Chair, I think, yes, on an operational perspective, we do see some positive changes, but the financials are a reflection of how the operations are performing, and the more we can get generation and the energy availability up, it means less dependence on the expensive supply options, and more importantly, to give confidence to the economy that Eskom can then meet the supply that's required, as highlighted by my chairperson. So it's still a challenge. We're confident we can address that. I thank you.
So, Chairman, that's it.
Thank you. Thank you, CFO, and the acting group CEO. Okay, Honorable Mare, you will be the first one. Yeah, you can.
Thank you, Chairperson. We are in the month of October, and within the next month, if I just think of the matriculants that will write the end exam, and if I was in accountancy, as I've done, on a higher grade level, and they would have given me this balance sheet, I would have answered, close the doors, because this business is bankrupt. If the state doesn't support as the shareholder, that's the facts if you look at the balance sheet. In the beginning of this year at the SONA, the President announced that the Eskom should be unbundling. So my first question would be then, how far are we with this process, and is it going ahead in which form? And what will be the cost implications with this whole process? Because anything you change and unbundle and divert, there's a cost implication of magnitude. And would that impact then further on the cash flow of Eskom as such? The next point is, if we look at the big loss that's been made in billions, and we equal that to the municipal debt that is outstanding, it could have equaled out to a zero balance if everything of the municipality was paid immediately. Now, there was established a ministerial committee to address this issue about municipal debt, but it doesn't seem that this committee is successful, because otherwise there shouldn't be an increase in the municipal debt as it seems it's going forward. Then I want to ask the question, because I did make a visit at some stage to Kusile and Medupi. What was now at this point
money have been implemented to deal with individuals who've been involved in the irregular.
Being ruthless. Not coming from a break.
I'm also
Thank you. Next.
Thank you, Chair. I firstly want to appreciate the presentation. Chair, I'm referring to slide 8.7. I want to know these timelines or the plan.